Perfect. All right. Okay. So, well, would it be? Oh, it should be able to hear me still on the phone, right?
Yeah, I can hear you. Perfect.
Okay. Let me share my screen and pull up. Actually, I don't have a document on my computer. I do, but I'm not using it there. So maybe I can share it on my phone. But does that work?
It should, or I can pull it up on my screen if you want me. If there's a specific chart you want me to look at.
Not a specific chart.
Okay.
Can you let me know if you see if it display over the apps? Um, not sure. Where's that?
You should be able to. What's wrong with sharing your screen through the computer? Doesn't work?
The document. Let me just load up the document then on the computer. One moment.
Okay.
I always read it on my phone, and I hadn't pulled it up on the computer.
I gotcha. Okay.
But I look at the trading view on my computer because it sucks on the phone.
Yeah, it's just I use it when I need to, but most of the time I'm on my computer, so that's the better way to look at things. Just a better, bigger screen, more room to see what's going on. Really.
Mm-hmm. Okay, now what page? Let me share my screen. All right, can you see it?
Yep.
Perfect. Let me move this Zoom thing. Go up. Why does it keep moving? There we go. Okay. So I was going over the different type of art patterns.
Mm-hmm.
And what I was curious about was going into more just getting an understanding of these a little bit better. The last one that made me really confused was the difference between these two, symmetric and the wedge.
Mm-hmm.
Now, when we're looking at these flags,
Let me pull this up on my end too.
let me see. This one I was really confusing me. The ascending and descending triangle.
Mm-hmm.
When it says that you're looking for an ascending triangle, you want for a bear bull flag, you want the flat bar to be at the top where resistance is, and the ascending line to be support. Correct?
Yes.
And in a bear flag, vice versa.
Correct.
So the flat line will be at the bottom, and the angle line will be going downward, right, towards the right.
Exactly.
Okay.
Do you understand the concept behind that and why that's a bullish or bearish pattern?
You can elaborate if you will.
Sure. Okay. So let's look at this ascending triangle, right? We can see where the resistance is and we can see where support is. What does resistance and support actually mean, right? Why is the stock coming down at the resistance, and why is it coming up at the support? At the resistance, at the resistance. Oh, you can answer if you know the answer. Go for it.
Okay. Well, I would say at resistance, that's where sellers are selling off the stock a lot and trying to, I guess, recoup losses and such, and
correct. Yeah.
make profits, and vice versa for support, where buyers are buying up the stock to keep the price at that level or higher.
Right, that's exactly it. So that resistance is where the sellers are in control, right? They're finding that price level, and that's where they're selling, and it's hammering the price back down. And then the buyers come in at the bottom and start to scoop it up. And with an ascending triangle like we're seeing here on the picture, what this tells you is that those sellers are kind of getting weaker because it's not going down as much, right? The buyers are getting more active at a higher price, right? They're willing to buy it at a higher price and a higher price and a higher price until that consolidation gets tighter and tighter, and eventually it kind of just breaks out, usually on the third attempt or more. You never want to buy on that second attempt at resistance because usually it fails. And like, as you can see in this perfect example, it hit once. When it hit the second time, it fell back really quickly. And then, it consolidated a little bit. And then finally, those buyers took control and were able to break that resistance level.
Gotcha.
Okay.
So for example, then, if we were looking at the Johnson and Johnson, would this be along those lines of that pattern, or will we be looking more in this area to see what pattern develops here?
Well, I mean, I think it's important to look at both, right? Because you want to look at where major macro levels, like you noted out right there at that 174 area, and that level dates back, several months, all the way back to August area. But then you also have those minor support and resistance areas, like the one that's forming right now at that 170 level that you marked out as well. For this one, you could say it's kind of in this ascending triangle pattern, but it would need to kind of fill out that shape a little bit more, right? Because it's not really completely there yet. But if it did over the next few months, that would make sense. Yeah, you can definitely see it developing.
Okay.
Yeah.
Where'd that document go? Sorry, one moment. There it is. No. I got too much stuff open. I don't know what I did with that document. Where'd it go? Is it up here somewhere? No. Oh, there it is.
There we go.
All right. So I guess that was the main thing I was curious about, is how would it look? So, and vice versa, or just some more information on what I'm looking at, in a sense. So the flat base, and these are long-term.
Yeah, long-term, very simple. Flat base, we're looking for that sideways consolidation with that clear resistance and not much price action going on. It's not super choppy. It's kind of just going sideways.
Okay, so if we was to look at Nike, I always look at them. I've been looking at them lately.
Mm-hmm.
I don't know if it's on here. So here I see that it's starting to consolidate in this area and kind of hold this old resistance line or their support now. So would this be developing, what kind of shape would that fall under?
Well, I mean, if you really look at it, right, this kind of looks like a bear flag, right? Because it had a really strong drop, strong sell-off from that 168, 170 area down, and now it's consolidating. And this is where things can get a little tricky, right? Because it's kind of like, is it a bear flag or is it just basing at support and then can push back up? We never really know for sure. I couldn't tell you 100%, but that's why we can keep both ideas in mind, because it does kind of look like a bear flag where it had a strong sell-off and now it's consolidating. Could it continue lower? It could, but it could also just sort of base out here, and then we could look to buy through that 150 area. But when a stock has like a big sell-off like this, I really want to wait until it has like several weeks of consolidation and it really digests the move that it just had, right? Like you have to kind of, the way that I like to look at it is stocks are kind of like runners, right? So like if a runner just ran 5 miles, just sprinted 5 miles, he's going to be pretty tired at the end of those 5 miles. He needs to take a breather, stretch, and do all these things before making another big move. Versus the guy who's been, taking care of his body and just relaxing, breathing, he's ready to make another sprint, AKA the stock that's been consolidating for a few weeks or even a few months. Those are the ones I'm looking for because those are the ones that present the biggest opportunities. So
this is kind of what we would be looking for, in a sense, symmetrical lineup here.
Somewhat, yeah, it could be a symmetrical triangle. We can kind of see that starting to form here. But yeah, overall, if we could see this really hold this 140 area over the next few weeks or even a few months. Like if you look at Nike, It tends to consolidate for several months before it really makes a significant move, right? Like you can see that consolidation between December of 2020 to June 2021. And then it just had huge earnings and then just continued higher another 15, 20 points. You can even look back to after the COVID drop, it consolidated a little bit for a few months and then had a really nice move. So, that's another thing that I like to look at in stocks is I want to look at their previous price action history and just see like, okay, is this the kind of stock that's going to take a few months to consolidate, which is fine, but I want to keep that in mind when it's starting to set up, because if it's only been setting up for say a week, but most of the setups take a few months, I already know not to expect anything huge out of this right away, but it's one to keep an eye on type of thing,
I got you. So another one I look at is United Health or United Health Group.
Yeah.
I noticed they've been jumping quite a bit and quite significantly.
Mm-hmm. Yeah. Huge move since COVID, basically 2 years ago.
Mm-hmm. And now, do you know what that's all about? Do you know anything about them right now?
I mean, health services that sector has just been really strong lately. If you look at any other charts in that sector, they're pretty similar. But this is not the type of stock that you want to buy on the breakout, right? Because here, let me share my screen. Okay, can you see my screen?
No. Do I have to stop sharing? Let me stop sharing.
You might need to, yeah.
There we go.
Okay, you can see mine?
Yeah.
All right, so we can see that this UNH has kind of just been in this macro ascending channel, right? Strong uptrend, which is great, right? That's what we want to see especially in like long-term holds. We just want to see it cruising higher, making new highs and just pushing along. If we're already in this around this area, in this like 300 area, great, we're chilling. But the problem with trying to buy breakouts on a setup like this is that every time, as you can see, it pushes to new highs and then sells off, pushes to new highs, sells off, pushes, new highs, sells off. So if you're buying the resistance, if you're trying to buy the breakout here, there's a high probability that it's just going to continue with this trend of, you might catch like this flags out for a little bit and then you buy the breakout, it goes about this high and then it sells off again, right? So what we want to do instead of looking to buy this through a resistance breakout is we want to look to buy this off support, right? When it's coming down and it's finding its footing, then we want to look to buy on the way up. So we're looking to buy off support and into resistance on these type of setups. Does that make sense?
Yep. That's what I was thinking of too, but I just didn't, wasn't sure.
Yeah, because the probability of it.
I was watching how the 200-day moving average is, when it touches it, it bounces higher, then it comes back down to it, and then bounces right back higher.
Exactly. So that's where you want to be looking to buy, really. It's like when it's bouncing off of that 200-day moving average, and that's where you can get a high probability trade. Because if you're wrong, you'll know right away. Versus if you're buying up here, even if you're buying through 500, if it had a tight flag over the next few weeks, and you're buying 500. What's your risk reward? Because really, like, if you're buying over here, like, where's the real out? Where's the real support? It's all the way down here, right? And like, how straight up could this stock go? It's already going kind of straight up, off support. So how much longer can it just kind of cruise straight up? Probably not that much longer. So that's where the probability comes into play. And for me, this one would be a pass for now. I want to see this come back and then buy on the pullback.
Gotcha. That makes sense.
Yeah. What else you got for me, Earl?
I'm trying to get out this view to go back to my screen.
Yeah, you want me? I can stop sharing mine and then you should be able to share yours.
Nah, it's okay. I got out. Oh yeah, I can share it again. Go back to
Go for it.
The document. All right. So, okay. What else can I think of while I got you? So this is an example of a bear flag, right?
Correct. Well, this would be a descending triangle.
Triangle.
So bearish pattern.
Okay. I hadn't read the rest of these yet.
Okay. Well, yeah. So in this chapter, obviously, you're going to learn a lot about different setups, and it's hard to retain all of them at the same time. But over time, you just start to see them in charts, and you can start to catch them real time. And that's what trading is all about: finding those setups and then executing on them, having a game plan, and knowing when to get out if you're wrong, and knowing when to stay in when you're right. So see, you can see
so
there.
This is probably what's happening or might happen with United Health right now, right?
Right. I mean, for now, it's still super strong. It could keep going higher. But yeah,
Right.
See, like at least from here, when you're on that ascending channel and you're buying off support, like let's say UNH comes down to support, and you start to see a little bit of strength, so you start to buy it, but it ends up falling over. At least your stop is right there, right? It's at the bottom of that channel, so that you can avoid that massive drop back lower.
Yeah.
Your stop would be right there under that little support, under that reversal, and then you can move on.
Okay, that makes sense.
Mm-hmm.
Shoulder, head, shoulder. This is what they were referring to, head and shoulders.
Yes, so that's a head and shoulders pattern. Essentially, you're going to see kind of 3 peaks, with the middle one being at the highest. This is a bearish pattern, right? So you would expect a continuation to the downside, and then an inverse head and shoulders is the bullish version. So that's just flipped over. Yeah, so there you can see a perfect example on
that looks like what we was just looking at. Well, what app?
Was it Nike?
Who was that? J&J. I was thinking no. Yeah.
Well, sort of, well, Johnson & Johnson, let me pull up J&J. You could kind of say that, it would have to complete that next shoulder over to really see that happen. But yeah, it could. And that's why, when I was talking to you earlier, I was like, if this 170 level can hold, then I'd be a lot more interested, because if it doesn't, it's probably heading lower. So, that's the funny thing, right? Is like the setup can really change in just a matter of just a couple of days. At one moment you think it's a bull flag, and then all of a sudden it has a horrible day, and then it just looks like a head and shoulders that's falling over, or whatever it might be. And that's why scanning is so important too.
Yeah, I got you. What do you say about a chart like this? I looked at this and was like, this is crazy.
Amgen. Yeah, I mean, it's a little all over the place, right?
Yeah.
So, it's the one thing you can do is just kind of start to map out where there has been resistance, and then just wait for setups in those levels. So let me just show you my screen real quick. Your screen. All right, can you see it?
Mm-hmm.
All right, so like for Amgen, I would just I can see that there's some resistance starting to form here. There's sort of this level right here that I kind of mapped out, but it actually doesn't look that great anymore. Here, let me delete this one.
Could that be like a cup and handle setup right here?
No, I wouldn't even call this a cup and handle. I think this one's just kind of all over the place, and it's just like a wait and see. It had earnings 3 days ago, and now it's just completely selling off those earnings. We'll see where it goes, but right now there's not much going on here. Like here, there's somewhat of a resistance, right at those earnings day high, and then so if it started to form some sort of pattern in this area, right, it just kind of consolidated here and then did something like that, then I'd be more interested. But right now, it's just kind of it's so all over the place that it's an immediate move on.
That's what I thought. That's what I figured. I just had to ask like that.
Yeah,
I looked at it and said, "Wow, that's everywhere."
Right. And I mean, that doesn't mean you throw it out forever, but it's just one that's, it wouldn't be on my focus list, because it's really nowhere near a great setup for me to buy.
Mm-hmm. I got you.
Yeah. There's going to be tons of stocks like that. There's thousands of stocks in the market. So it's all about finding the ones that are really setting up for you, and then just avoiding the ones that you don't want to force things that aren't there, because that's where you get a lot of doubt, and you start to, not follow your game plans and hold on to losers. And then that's where all that stems from. So if you can avoid that first step, that little domino, so that it doesn't turn into a giant domino effect of just keeping a focus list of like when you scan, you find the charts that have some potential and just stick to those and watch them for a few weeks and see what happens. That's going to help you avoid a lot of mistakes.
Okay, I'm gonna go ahead and get back to it.
All right, man. If you have any questions, just hit me up. Okay.
All right, appreciate it, Heaven.
Yeah, of course. Take care.
All right, now.
Bye.
Bye.